Ladies and gentlemen, K Kim here with the Traders Club. Welcome to the market update. Today's Friday, September 6th, and I am recording this intraday, so market should be open another, let's see, 2 hours and 20 minutes as I record this video. 2 hours and 20 minutes. Actually, let's go through these, indices here. Let's start with the spider, diamond, or Qs, diamond, Russell, semis, and the banks. I do want to share, let's talk about, I've been tweeting a lot of things this week. I want to talk about this. I actually just tweeted out just, what was that? Just like an hour and a half ago or 2 hours ago here, this volatility index weekly chart, this VIX, and you can always, I do tweet throughout the week, so you can follow me at 2K Kim. And and I do post charts in here and there, but this is what I tweeted out just earlier today, and I've noticed this here again. There's this VIX weekly chart, that's the wick, and that's bearish Harami pattern, bearish Harami, right? And that's the wick, and that's the bearish engulfing pattern. That's the upper wick, and that's the evening star. The 3 week, right? We got the bullish candle, shooting star, and then the follow through to the downside, the 3 week evening star reversal candle or pattern, and that made the equities go down a lot for many months there. And also we got that wick, bearish engulfing. We got the wick, and a lot of shooting stars here, and then the bearish engulfing there. So it looks like the VIX is seeing some weakness here. There's an attempt to move higher here, and here, and here, and here, and here, and this one too, similar to here, but was not able to do that. And then, inevitably what happened was lower highs were created, right? So, and that's kind of what I was tweeting about, and just wanted to explain that real quick. But going back to the chart here, I actually wanted to share these charts, and these charts I've been tweeting out throughout this entire process, right? Throughout this lot of up and down shenanigan, last several weeks or a couple of weeks, I've been tweeting it out. So you guys remember this? It was like a couple of weeks ago or something like that. We saw that abrupt sell-off. The gap gets filled. Again, it's all on my Twitter at 2K Kim. You can go and check those, but I just pulled up these charts that I tweeted out, and you can see that we're holding that level. At least we saw some dip buyers coming in there, and then I think here this was the next day or the next couple days, I'm not sure, this is Q's, but we held that level. We saw that up gap, but the down gap still open, and that down gap is what was making things difficult for the bears. And we've been talking about this gap ever since we went back here, I think early August, and this gap. And if you've been following me on, my blog and Twitter and YouTube, I've been talking about this gap must be filled. And the longer this gap stays open, the more difficult it's gonna be for the bulls, the more hectic it's gonna be. And sure enough, it made difficult for the bulls in the month of August. You can see bulls got up trying to fill that, got up, attempt to fill that, actually filled halfway, but was not able to fill the entirety of it, and then tanked. Got up, trying to fill that, didn't happen, got back up, trying to fill that, oh, couldn't fill it, tanked. So now we got back to that support. There was an up gap, and then we're seeing, okay, let's see how it plays out with that up gap. Let's see if we can protect that up gap, right? And this is the same thing on the S&P. Oh, I think it's it was the next day. So this is the same thing. So this was the day before. Let's see how it plays out. And then either next day or a couple days later, tweeted out, well, what I wanted to point it out here is we did protect it. You can see here. So we saw that support, we saw this gap, right? Initially, when we saw the gap up, we got up here, we made another gap up, but it failed got up a little bit, pulled back, and bears attempted to fill this up gap. Kind of like same thing as what the bulls attempted to do and failed. Kind of like bears are doing it. Bears really want to fill that down gap and failed. Bulls brought it up here, right? So that's kind of what was going on there. And then what happened next? There you go. Now we got another up gap, right? It's the same chart there, Qs, 65 minutes. Now, okay, so again, we got that support, this gap still remains open. Bears brought it down, failed to fill it. Bulls took advantage of that situation. Again, it's the same logic applies here with, bulls trying to fill this gap, failed to do it, and there's another gap down. Well, bears was not able to fill that down gap, and then there's another gap up. So we got two up gaps, and we got down gap there. We got the coming into resistance. We got the gap here. So the resistance level here, and this is a level that bulls been struggling in that vicinity, right? Again, all of this I've been tweeting it out, just either every day or every other week, every other day. Just showing you the process of what was going on. And then this is S&P, and then you see that. So what's going on? This is S&P. We saw that up gap. Even on the S&P, you can see that that gap entirety wasn't filled. Remember, this was where it closed and it opened here. So there was a gap here, right? If you look at intraday, smaller time frame, you'll see that gap. And then again, bulls or bears trying to fill that gap, fail to do that. And then, bulls gap that up. And there's another attempt to, we filled, because we gapped up here, right? If bears attempt to, did feel like maybe a third of it, but was not able to fill the entirety. It was a pretty big gap, sizable gap. And then bulls took that advantage, brought it up, right? But yet again, bulls not able to fill the entirety of this gap, right? And this is what I'm showing here. Even with this gap up here, not able to fill it. Not able to fill this gap. Gap still remains open. That red box denotes the down gap. These blue boxes is up gap, right? But we're kind of retesting this level, kind of holding there, right? That was what was going on in that time. And then I think this was a couple days later, several days later. So now what happened was, I'm showing you, step by step what was going on. What happened was, now this is S&P, same chart as previous, but this is a couple days later. Now you can see it got up here, attempt to fill this gap right there, was not able to do it. So then bears bring it down. We saw another gap down. You see that? And then bulls, this is what happened. So there was this gap, right? There was this big gap, right? There's this big gap. So now bears, since bulls failed to fill this down gap, now bears are going to try to come back down to fill this up gap. And then what happened? What happened was bears brought it down. There's a gap down. And this thing came down, but still was not able to fill the entirety of it. We left just a little bit. And that's not a good thing, right? That's going to favor the bulls, at least in the short term, because we're looking at things in the short term, remember? And that is the prior resistance, right? So bears were not able to fill that. You can see bears really try to come down and fill that gap. We established that higher low. We got the low, higher low. The gap remains open. So we still remember up gap open, second up gap open. And then bull took that advantage. Bears were not able to fill the entirety of it. Remember this gap. The gap was filled entirety and flushed right through and came all the way down. This was not, bears were not able to fill it. Not only that, towards the end of that day or that hour, bulls brought it up. You can see. And then bulls gapped that up again. So now we got this gap open, this gap open. We got 3 gaps open along with what? Higher lows. See, what you don't understand is this thing tanked tanked. But here, something has changed. Bull's attitude, Bull's demeanor has changed a little bit. They're getting a little bit more confidence with their hair. There was no tankage. Instead, we stopped short. If you actually put a Fibonacci here to here, there will be about 50% retracement, along with the prior resistance new support and the gap that didn't get filled all the way. Something was going on there, right? And then this happened. I mean, this is the same day, I think. This is the same day. Yeah, this is the same thing. So I'm just looking at it on the Dow now. On the Dow, you can see we have a textbook island top, island bottom gap. Textbook, meaning gap down, gap up, there's space. There's nothing in between. That's totally textbook island gap. And we did have, you know, kind of like island too. You can see there's a here, there's a gap. You see that and that. So this was also island gap. That little pocket right here and here. You see that? So that was island gap also on the S&P. However, we did have a more well-defined island gap on the down. That's what I was emphasizing in this chart. Again, all this was tweeted out. I'm not just, you know, you can go and check it at 2K Kim to check my feed. But that was more of a textbook island gap there, right? And you can see that I denoted that's an island, that's a gap. And now, and this is where something has shifted, right? Something has shifted because we got up, tank. Now, bulls are pretty adamant. Not only that, on top of that, we have higher lows here. We got prior resistance, new support here, and we opened island gap along with the uptrend support in the micro term. Something has been brewing there, and then it was done. It was done. We have basically the entire month of August became an island bottom. So this entirety of it became an island bottom, and we saw the break. And this was yesterday, early morning, right? If you go back and listen to my video last weekend, I talked about how it's redundant for me to say the same thing on every pullback and have to reply to every single, every insecure tweet that you guys reply to me. There's a stupid question because I explain things in this video, right? And then every time there's a little bit of volatility, you go back to your fearful state and like, oh my God, okay, yeah, man, fundamental doesn't look good, bro. Market is gonna crash, man. I don't know. The China deal, yeah, man, I don't know. That's gonna be bad for us. Oh yeah, the Fed's gonna do something crazy. Oh, Trump, he's gonna tweet something stupid, and the market is gonna crash. I was emphasizing last week, expressing that that's the stupidest thing I've ever heard. If you say stuff like Trump is gonna tweet something and the market is gonna come down hard, you do not understand this market, and you shouldn't be trading or investing. But anyway, so there you have it. There's a step-by-step process. This is the reason why if you've been following me on my blog and, at 2K Kim or YouTube, you know that I've tracked gaps. And this is the reason why I showed you just step-by-step process. And you can kind of understand what's really going on. The market is going to try to tell us the story. And I know last week, I know that the... Last weekend I didn't, because it was a long holiday weekend, and I didn't do my video until Sunday. Or was it Saturday or Sunday, right? Sunday. So if you because people are asking me because I don't. It's not regularly. It sometimes it's Friday, sometimes Saturday. Most likely it's Friday, but sometimes, I don't feel like doing it on Friday or I'm busy or something like that. So I do Saturday and Sunday. Sometimes it's not regular schedule for me. I just kind of do when I have time to do it. And sometimes I write articles and I do tweet things out. But You know, if you want to, this is my website, twotradersclub.com. So if you can go to here, analysis, and here, let's do that. What I'm trying to show you is, if you come down right here, article alert, right? So if you go to twotradersclub.com, hit analysis, you know, and then you come here, or you can hit any of these, but you can hit any of my links to articles here. But you go to article alert, and you see that there's email. You put your email address, and you just subscribe. Then any new video, any new articles, when I publish it, you're gonna get email alert, so you don't have to always kind of look out for my video on YouTube or trying to look out for my tweets. That way, any new articles, any new videos, you get alerted. It's just because I don't tweet things every day. There are times where I won't say anything for a couple days. Sometimes, you know, if market isn't doing anything, like you know what I mean. And then some weekends I won't always do my video on Friday. So if you're like wondering, you know, just like, so you don't have to look out for it, so you get instant. Sometimes people ask me about that. So you can go there, put your email, then, you know, whenever I get new video, new article, you make sure to get that alert in your email so that you can always find it, so you don't have to look out for the feed and stuff like that. Spider. So I just spent 16 minutes, something like that, to kind of explain to you the process, and we saw that big gap, right? I don't know why in my chart there's a lower wick, but there's no lower wick. It's actually, the gap actually is still open, as you can see right here. That's 65-minute chart. So I think bulls really want to defend this. Bulls want to protect this. You know, should the price decline next couple of days, early next week, we want to see this level holding 296. I think we're going to. I think it's ready to get back to 300 and above that level. We'll be talking about this, and I've been talking about this, how, you know, I've been telling you guys that bears are going to say that this is triple top, and this is going to come down to December lower, maybe lower. I've said this back in July. That's not going to happen. We may see a pullback, but that's not how triple top works, you know. And you can see that we've consolidated. We're breaking out to the lower. Also, what I've been hearing is, you know, this is a bearish flag. That, again, doesn't work that way. Because you know why you say things like that? Why? Because you go around, listen to some bulls on Twitter with maybe, I don't know, quote-unquote credentials with high followings, says, look at this cheat sheet of wedges and flags and these stupid patterns. That's not going to be that simple. Market is not going to operate in a simple mathematical calculated way where you got, oh my god, yeah man, that's a bear flag, haha, yeah, I'm going to short this, coming down, new leg. It doesn't work like that all the time. You have to understand where the market is going, the big tide, and then zoom in and then try to understand the short term of things, right? But you also have to zoom out and then see where the market is at in a big picture. Let's go through these quickly. Or Qs, same thing, right? You've got the gap down, gap up. Entirety of month of August has become island bottom. This has, you know what it has done? We have cultivated and established that higher low, and this higher low, I have to say, is much, much more stable because it consolidated. V-shape, a lot of times, is not so stable. Not always. Usually, V-shape can be very, very tricky because it could be wild as it goes higher. But with the consolidation, right, what the market is doing, market is resting after a big move, which it has done. Nasdaq is up 25% year to date. The S&P is 20%. So it needs to take its time before resuming to the upside. Diamond, same thing, right? Entirety of month of August, becoming a bottom there, like that cultivation of high low there. We got a nice sizable gap up, and we're driving to the upside. And you can see also, we talked about moving averages last week. Look at the moving average right here. Look at the moving average right there. And these moving averages, that's 50 and 20. That's 50 and 20. Settings might be a little different than yours. I forgot what setting was, but I did change in my settings. I think to accommodate, the reason I changed my setting is to accommodate the spider price action. So you can see that 20 hitting that, and then once we saw that move. 20 is hitting that, we crossed that move, and then we saw that move there, right? 20 declining, 20 declining, 20 rising, 20 rising, right? So you kind of get the good idea of, the minor term trend, right? So now you can see 20 EMA moving together here and here, and once they cross, and and then the price stayed above it, right? You saw the market went up at least another month or so, and that's kind of what we're seeing here, right? Here, 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 there. Russell 2000. Russell 2000 still lagging, the most lagging index. Here only 12.5% year to date, but we're seeing we saw a pretty nice gap up here, holding up well. I think sooner or later though, Russell 2000 is going to start, doing its catch up. Same thing with the banks. The banks and the small caps, right? They've been lagging, but what's going to happen is, what's going to happen is these large cap indices are going to slow down a bit, and you're going to see this Russell and the banks start to outperform them. Even yesterday, banks were leading. Yesterday, when we saw a big move, banks were leading. You can see they were a pretty big size. Banks were like 2% or something like that yesterday. So when you see a big move, you're going to start to see the Russell and the banks, they start to see a bigger move. And then that's how we're going to do a little catch up. On the banks here, XLF, you can also see that we're now staying above the moving average, right? There was this gap down. That gap just got filled. You see, filling that gap, entirety of it, that's what's important. That gap is completely filled. We're holding up now, and if we can hold this gap, right, I think there's a good chance banks is getting ready to go to the upside. One last one, semis. Couple weeks ago, several weeks ago, I gave you the same level that I gave you, right? This is a Fibonacci level there, and then I gave you 110 and 107, right? And that's exactly where we found support here. That's the last level of my Fib, as you can see there. And we consolidated. We can put a box there as well if you want, noting that that's consolidation. We saw gap up, moving higher, right? So again, as I finish this video, market should be open another 2 hours. Just keep that in mind, but the market is looking good. Looks like market is S&P, the spider is headed for at least to make new all-time highs. And if we can get above that, what I'd like to see is either we go up a little bit and then start retesting these as, new support, right? Something like that. Resistance, 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 and support. Again, it's not going to be precisely that level. You could go down a little lower, whatever, in that vicinity. And then people are going to start talking, the bears going to start talking about, oh my God, there's a triple top, or oh my God, it could look something like this. And then people are going to be like, oh my God, okay, there's a head and shoulders. Yep, that's a bull trap. That thing is going to go to 240. People are going to say stuff like that again. Just keep that in mind. And we're going to be hanging around here for a little bit and then get to 320. That's kind of what I'm thinking what's going to do. But we'll track it on a weekly basis, see how it plays out. But it feels like that's what it's going to do. We get another, month of September, we make another move. And then maybe October, November, something like this, some consolidation, some shenanigans, and up and down. And then December or so, we kind of get that end of the year rally to about 320. That's kind of what I'm thinking the market is poised to do. But we'll follow up next week. We'll go from there, right? You guys have a wonderful weekend, and good luck trading next week.